All right, let's check in on the economy now with no lazy money and Nick Hopwood, certified financial planner, founder at Peak Wealth Management. Nick, good morning. Welcome to the program.
Good morning, Steve. How are you?
I'm doing well. You were the one who notified me here a couple of days ago that inflation had come in significantly lower than predicted. In fact, 63 so-called experts all got it wrong. How does 63 out of 63 get it wrong? It's 3.5%. I mean, it's not great, but it's not terrible either, is it?
Well, it's just the way it is when it comes to predicting economics. But the inflation rate came in at 3.5, which is better than expected, as you mentioned, and down from over 4% from the prior month. But it is still a long way from our target of 2%, so it puts pressure on the Fed to keep rates higher. In fact, the markets are predicting that we'll have a rate hike between now and the end of the year.
So a rate hike is still in the offering then. That seems, well, disappointing to me because there was a point in time not that long ago they thought there'd be a couple of rate cuts this year, correct?
That's exactly right. And so it is hard to get to wrap your brain around the fact that we go from expectation of two more cuts to one rate hike. But look, it provides an opportunity right now for you. If you have a car loan that's at a high rate, there's a credit union in my area that's offering 4.6%. Get it while it's there. Another credit union in the area offering home equity lines at 4.75%. We haven't seen rates this low when it comes to a home equity line in years.
So get the money while you can. All right, so here's
Exactly.
something that keeps popping up on my radar. People living with their parents longer than they used to. And you know what? This doesn't bother me. I have a child in college living in my house, and I think it's perfectly fine. But it's not considered smart money to hang out with mom and dad, which I guess is different from where we've been over the last few years. Tell me about this.
Yeah, Steve, remember the movie Failure to Launch with Matthew McConaughey? He was in his 30s and
Yeah.
he was just kind of living off of mom and dad. Well, it's different now. 49% of people under age 30 are living with a parent right now, according to the Wall Street Journal. It's no longer a sign of being a loser, so to speak. It's a sign of smart money. And the reason is because of student loans, these nagging student loans that we are trying to get out from under, as well as the price of housing and mortgage rates. So the price of housing is more expensive, the student loans are lingering, people are staying at home and saving money.
Student loans, like I say, these universities and colleges should be co-signers on the loan. If they give you a piece of paper that isn't worth anything 5 or 10 years down the line, they should pick up the bill. That would change their attitudes. All right, here's something about making some money, and I don't understand how anybody, regardless of your political persuasion, could not take advantage of these Trump accounts. You say a baby could have $7.5 million in a Roth if you max this thing out. Tell me, these Trump accounts, I think, are wonderful. Your thoughts?
I think it's the best thing since sliced bread. So ultimately, it's a non-deductible IRA, and you think, well, what's so special about that? Well, the thing that's special is that you can start at birth. So $5,000 per year for 18 years is $90,000 in deposits. If that 90,000 is growing at 8% at age 18, it would be worth 202,000. Now, in your between 18 and 25, if you're not if your parents are not claiming you as a dependent, you can convert that money to Roth at an ultra low income tax rate. Get the money into Roth, Steve, with no further contributions, just that first 90,000. At age 65, growing at 8%, it would be worth $7.5 million. Now, of course, past performance is no guarantee of future results. But look, the market has averaged larger than 8% over our lifetime. So the sky is the
Yeah.
limit here.
So $7.5 million, even adjusted for inflation, that's a big deal. That is a big
Yeah,
deal.
adjusted for
Uh,
inflation would be about 2.3 million in today's dollars as a present value. But look, most people who are retiring today don't have 2.3 million. So it's
that's
a
right.
really incredible opportunity.
Okay, there you have that. What about retirement confidence, though? Excuse me. A survey says it's the lowest level in 10 years. Why?
Yeah, despite a bull market over the last 15 years of fantastic market performance, 61% of workers are not confident that they can retire with confidence, with comfort. And there's two main reasons. Number one is healthcare expenses. Obviously, we all know what's happened with our double-digit healthcare inflation. But number two is that they build a plan where they think they can work till age 65, but ultimately, because of health or because of getting downsized, they ultimately have to leave the workforce at 62. And those 3 years, it's 3 years where you have to take withdrawals from the portfolio so the portfolio can't grow. 3 years where you're not making deposits to the portfolio. 3 years where maybe you're taking Social Security earlier and it's not continuing to roll up. And so this is definitely on the minds of workers today. And ironically, right, with a great market and a great labor unemployment rate, we're lacking confidence.
Lacking confidence. I also saw a deal in the Wall Street Journal. People can't retire because of student loans. I keep coming back to these student loans. We need to fix this problem. I don't know what the answer is, Nick, but we do need to fix the problem because people are saddled with debt with a diploma that doesn't get them anywhere. And that's a real problem. 20 seconds on that.
Yeah, the Wall Street Journal profiled a couple that has $114,000 in student loans at age 65, so they're unable to retire. Yeah,
Yeah.
so it's like you keep refinancing your mortgage, and you retire with a brand new 30-year mortgage. Same concept if you continue to refinance that student debt. So you have to have a plan to pay it off.
You got to have a plan to avoid it in the first place. I think college, like my friend Charlie Kirk said, is a scam for a lot of people. It doesn't get them anywhere except debt. PeakWM.com/Gruber to get a free Social Security analysis. PeakWM.com/Gruber. The QR code is right there on your screen. You can talk to Nick personally, and you'll be glad you did. Nick, thank you.
Thank you.
Really appreciate it. Student loans. What a scam. I'll be back.